What is going on, my friends, and welcome back to another video on the channel. Well, as we start to see September approaching, which is historically a bad month for crypto, and you mix that in with what's going on in China and their housing market, and you mix that in with what's going on with the flood of Mt. Gox, many people are starting to get concerned that the next week or couple weeks could be quite devastating for crypto. So in today's video, I'm going to specifically again be focusing on Bitcoin and letting you guys know my thoughts and opinions and how I am going about trading and buying and shorting in order to maximize gains even in times of uncertainty like these. So let's not waste any more time at all, and let's get straight into today's video. So of course, in the last videos, I've been talking about Solana and Matic, etc., and I've been talking about the fact that we are in a bearish pattern. Now, what that looks like is that whenever we are in a macro downtrend and we enter into an ascending structure, we will almost always, more often than not, break out to the downside. I mean, that is just what usually happens, okay? So in response to that, for things like Solana and Ethereum and Matic, we did enter in onto a short trade that we are up on right now. And this is a screenshot from my Patreon, of course, link in the description below. But what we can see here is that we opened up a short trade the moment we broke support from this ascending wedge here. As soon as we lost the bottom side, we knew that usually what happens is that we will fall down below that key level of support. And now, once that happens, we will usually go back to the previous time that we established support on that ascending wedge line. And that's where we will short the price down to. So once you lose support, boom, you go down to the next time that we touch that line, which is currently looking at about $19,080. So you guys know that we did open up that short trade. We are up about 9% currently because we are on 2.5x leverage. But again, the moment we lost support here, boom, where are we going? We started to open up the short trade at 20,750, expecting the price of 19,081 to come into play. And again, since the price is down about 3.5% on 2.5x leverage, we're up about 9%. So that's just a little bit of a recap on what has been happening. But let's take a look at what we can expect to happen over the next couple weeks here. So with all of the bad news and with everyone worried and with everyone kind of focused in on the idea that everything's going to go down, that already inherently tells me that it could be not as bad as expected, right? What I've noticed in history is that whenever everyone thinks there's going to be a crash, when everyone thinks that the price has to fall, it usually doesn't, okay? So with all of the FUD going on and with everyone freaking out, that already tells me I don't think this is going to be as bad as people think, right? I'm seeing the $10,000, $11,000, $12,000 price predictions coming in, and I'm just not convinced at this point that it needs to do so, okay? But from a technical perspective, we still have three key levels that are going to be the determining factors of if that will happen. For me, they're 20,750, they're 19,080, and they're 17,900. Well, why are these levels so important? These levels are so important because they are the key levels of support that could at any given point give us the ability to bounce back to the upside and continue the growth that we have been seeing over the last few weeks. Although it might not feel like it, although it might not seem like it, we have started a short-term uptrend. We were putting in the higher lows, and we were putting in the higher highs. So if at any given point we do start to come back down, establish a macro higher low, we could very well continue this uptrend and finally start to see the bullish reversal that we've been waiting for. So why are 19,080 and 17,900 so important? Well, it goes back to our shorting strategy. Okay, what is our shorting strategy? Just a recap. Like I mentioned earlier, when you have an ascending structure of this nature, what usually happens is that if you break the support, you will go down to the previous point that you touched the support. So what you do to make it very simple is you just go in and say, okay, well, we broke the bottom side of the wedge. So all I need to do is draw out the times with horizontal lines that we touched the bottom side of the wedge. And those are my breakdown targets, okay? And so what those levels are going to be are the ones that are the most likely to see buyers step in. It's a very easy strategy. I am actually 13 for 13 on this since May. What will usually happen is, again, support's lost, boom. I open up that short trade all the way down to the most recent time we touched support, boom. That's the point in which buyers are more likely to step in, and that's the point in which I do close those short positions. And so for that reason, as long as we are above 19,080, and as long as we are above 17,900, we still have two key points of support that the buyers are extremely likely to step in and have historically stepped in. We saw the double bottom get established back here. We saw this massive wick down here in which we immediately entered back up into a few weeks of growth. And so for that reason, I'm not personally convinced that we're going to see this devastating crash until we at least lose these two levels at 19,080 and 17,900. And so for that reason, what I am doing now is I am maintaining my short trade, but I'm not over leveraging it, right? I'm on 2.5x leverage. I still think that we very easily could revisit 20,000 or 19,080. I think we could visit 17.9 thousand, but I'm not going to say we definitely are. And so what I am going to do is I'm going to maintain my small leverage on a short trade, expecting that we could come down here, but don't have to. The point in which I would start to change my mind is that if the price comes back up above 20,750. What usually happens is that when we hit a level of support and lose it, that level will become flipped into resistance if we're in a macro downturn, and we will continue to the downside. But if at any given point we clear 20,750 and hold it and start to look to continue back up past this recent high here, that tells me right there, okay, no, we're probably not going into a macro downturn. I know things aren't looking the best in the environment right now, but the price is saying that buyers are stepping in at these crucial levels here, and they're not all too interested in seeing the price fall below 17,000. And so for that reason, I am going to start to close down on some of those short trades and start to prepare for my long trades back to the upside here. So what you need to be on the biggest lookout for, in my opinion at least, is how do we interact with these three levels? Go in your charts and mark these out. If you do want to use BitGet, of course, the link is provided down. It's the first link in the description. You can get up to $4,000 in deposit bonuses, but it's very easy to come on here and just simply mark out these levels that are so important. And what you're going to just do is wait and watch. There's no point in being in a rush. We've been in a macro downturn for months at this point, almost a year at this point. There's no need to be in a rush. Mark down 20.7, mark down 19.08, mark down 17.9, and see how we interact with them. If we bounce off of this one and bounce off of this one and crash below 17.9, yeah, you bet your ass we're probably going to start to see $15,000, $16,000. That's what's likely to happen. But while we're above these levels, there's no point in saying that that has to happen, because it does not need to happen, right? We look at the 4-hour charts at this given point, we are seeing bullish divergence forming. What you can see here is that we set in this low, a lower low currently, but you zoom in on the RSI here, what are we doing? We've put in a low, a higher low at this point. And so while we are approaching these key levels of support, it's clearly showing momentum is changing, and we are getting a case of bullish divergence to say that, yeah, we very could possibly bounce to the upside here without needing to revisit those bottom levels. And so I know it gets easy to get drawn into the emotions of everyone saying that everything has to crash, but the bigger picture here is that until we start to see these levels lost, there's no point in saying that it is going to happen, because at this point, I still say we have two key levels of support that say otherwise, right? That's the levels where the bulls are the most likely to step in. And if those levels are not held, then it says, yeah, that's the confirmation. Sure. Now it makes sense why everyone's worried that we are going to really start to see capitulation to the downside. So to kind of recap, my opinion right now is while we are still sitting back above these key levels of support, I'm not too concerned that we are going to see a crash. We're seeing bullish divergence. We're seeing the bull step in, and we're seeing these levels, this 19,900 level, this 17,900, the $17.8 thousand level. Those are still the points in which we can expect a lot of support and a battle. Okay. And so while we still have these bullish zones of support, I'm not getting too carried away with the idea that we are going to see something completely devastating, okay? Sure, I think it's very likely we do revisit these levels, so I do have short trades open, taking advantage of that. But I'm not freaking out and selling my positions because I'm not convinced that we are going to see the destruction of the entire crypto market over the next couple weeks, right? Remember, historically, September is a bad month for crypto. But until we start to see confirmations, anytime we have made general assumptions about the market, it usually will do the opposite, okay? And so for that reason, go download BitGet, go to BitGet, link down below. It's the first link in the description. Sign up, get your deposit bonus up to $4,000. Use their charts, map each one of these levels and say, these are the zones of confirmation. Use confirmations to make decisions. Don't use emotions, and don't use unnecessary bias that are coming from these news articles that are simply there to get you to click on them. So they're going to say the most bewildering shit you can possibly imagine, okay? And so once you do that, then you can start to use those confirmations to make logical, rational trades. Again, we are 13 for 13 over in the Patreon for these different trades that we've made off of these short strategies, and all we do is just be patient, okay? And so as this does happen, as these things do continue to play out, I will continue to update you on the channel here. And of course, I will be, continuing to do trades as long as there are trades available that make sense. And so if you do enjoy videos of this style, well, I break down my thoughts, let you guys know the levels I'm looking out for, the trades that I'm taking on to take advantage of these moves. Definitely do subscribe to the channel and turn on notifications so you do not miss another video. But with that said, that's going to be about it for today's video. Of course, I hope you did enjoy, and I will see you all next time. Peace.